Thanks for joining us again to talk a little bit of real estate here. For the last few weeks that we've been doing this, we've been really focused on what's going on in and around the New York suburban markets, New York City. And today we're going to have a little chat with John Wanberg, who's down in the Orlando area. So thanks, John, for joining us.
Hey, my pleasure. Thanks for having me.
No worries. So I'd like to touch on a couple things with John. One is what he's seeing in the market overall, and then I'd like to get into a little bit around the investing market that Matt and I have gotten involved with down there, which is a much different world than what we're seeing here. So starting this off, what are you guys seeing down there?
Well, I mean, we kind of initially thought that we were going to see a lot of pullback in the market, but so far our market's actually probably strengthened a little bit. So we're seeing still multiple offers on our listings in the traditional business, and basically normal closings as far as timing goes. So it's still able to close in 30 days or less. So it's pretty amazing. I mean, so far everything is continuing on the same trajectory that it was before the COVID stuff started happening.
It's really interesting because here we're still not allowed to show at all in New York City, and so there is no market yet, right? We don't know what's going on. On Long Island, there's been a lot more activity, even though we're sort of under the same rules,
Right.
which has been interesting. People are still willing to do things that they're not necessarily willing to do in Manhattan. But from what you're telling me, it sounds like even going into COVID, there was no break at all. Like, at least in these markets, there was a break maybe for about the first 30 days, and then it started to increase. Especially in the Jersey market. How did you see it there?
Yeah, I'd say similar here. So our April slowed down a bit, and I think that was just because of the uncertainty. People didn't know what was going on or what was going to happen. And then, so our April was like, for our traditional real estate business, slowed down. Our showings slowed down. Everybody was trying to do showings virtually, and then they have kind of come back. I mean, they're doing regular traditional open houses with people coming to them now. So it's kind of back on track really for that. So
wow.
Yeah, we probably had a 30-day lull in the market. There were still people putting stuff under contract though, even during that time. So it was interesting. Like our closing slowed down the month after, from that, and then they picked back up.
So you're having open houses down there, and what does that look like?
Well, they were doing these virtual open houses for a while, and then now they've gone back to, regular open houses, traditional open houses. So where they put out signs and people come through. So they're supposed to, they are supposed to abide by the CDC guidelines as far as the number of people in the house and trying to maintain social distancing and things like that. But overall, it's going back mostly to normal, not total normal yet, but we're on the way.
Did you see an increase in people looking to move down there or rent down there in the short term?
I heard, I mean, I wouldn't say, I think it's too early to see if we'll see that increase yet. Like, I do think that that's a possibility. And I have heard some people say that they're wanting to move out of the city, out of Orlando, for example, to we're about, 35 minutes out of there. And so we did see some of that, but I think that's likely to come maybe next year even,
And what about from up north?
Same. Yeah, the same. I think the people up north can't do anything right now. We have one or two clients that came down from New York that were moving here to get away from the stuff up there, and they got here and they have to quarantine for 2 weeks before they're even allowed to go see houses. At least, they're supposed to sign something agreeing to that when they come across the border. So I think that there's not going to be a huge migration when they have to deal with that stuff,
Interesting. Okay, so let's focus a little bit on the investment world, down in your area and what that looks like. And just to frame it a little bit, a lot of the people from the Northeast, especially in and around the New York City area, when they're looking at an investment opportunity, especially in a single family residential home, whether it be a traditional home with land in a suburb or even an apartment in Manhattan, you're buying, a low cap rate, almost like a bond, a low cap rate opportunity where there's going to be, high potential upside. That's what the investment play is in this area.
Okay.
What do you see by you?
Down here, we have a lot of single family homes that have great cash flow. So there's upside in the way of appreciation as well, but the traditional like single family home, you can buy a 3-bedroom 2-bath home for $150,000 to $200,000 that will cash flow, maybe rent for $1,500 to $1,800 a month. So your rate of return, if you were just doing like straight cash, might be 10 or 12%, but you can end up getting better than that if you finance. So as much as 20 to 30% of financing. So it just depends. And our taxes are pretty low too. So like, especially if you're comparing our tax rates to the taxes up there, the taxes on one of those single family homes might be $2,500 or so. So, there's a good opportunity there for the tradition, like just a regular cash flow on a single family.
And so that's great, right? I mean, it's a much different play. And by the way, for those of you out there, there are a lot of markets around the country that are similar, right? Where there's good cash flow and appreciation. I mean, for Matt and I think Florida holds a lot of things that are very interesting to us, which is why we've been investing down there. And everyone should choose to do what they're comfortable with. John, from your perspective, why should people be buying and investing and believing in this market that you're referring to in the long run?
Well, the number of people moving to Florida every day is massive. So there's a huge migration, especially from up north down here. And so because of that, the demand is always high. Excuse me, especially in the what I call entry level. So entry level housing, I would consider anything from $125,000 home up to maybe even as high as $250,000 or $275,000, and that market is just severely low on inventory. So because of that, it's forcing a lot of appreciation. Like in the last couple of years, we've seen huge appreciation in that market and a huge decrease in inventory. So it's real strong as far as, and I think that it'll continue. Our research is showing that it's going to continue to. People are going to continue to migrate here and continue to grow. And there's still quite a bit of land in Florida as well. So it's like it's not like they're compressed into an area where there's not room to continue to build and for people to continue to come down. So that's what our thought is, that the long term is still strong, really strong, as far as our outlook for the long term. And then in the short term, you can cash flow all the way there. So like what you buy here today will make money. And so, you're not carrying that increase in mortgage payment or whatever all the way forward. You can actually cash flow on it, gain the appreciation, and all the way through. So,
and can you also touch on the process, because the process down there is a lot different than the process up here, which was a big learning curve to Russ and myself. The biggest difference is, down there, accepted offer, something goes into a diligence period, where up here, things are constantly being shown until contracts are signed. So if you can touch on that and take people through that process.
Yeah, absolutely. So down here, when a property goes under contract, what happens is, you'll have an offer from the, buyer's agent, and, we go back and forth on negotiations on the terms and the price, of course, the same as I'm sure it is up there. But once a contract is executed, then it is, considered under contract, which means it's already a contract between a seller and a buyer. We can take backup offers, but it's very rare. Like most of the time, buyer's agents don't show properties that are under contract or pending is the term we use in our MLS here. I'm assuming it's similar up there. And then, so once it's under contract, you have, typically 10 days to do inspections. And then you have a normally, 25 to 30 day financing period. And then after that, you close. So there's a couple of outs for a buyer. So if you put a property under contract, and you use what we our as is contract, then your inspection period is 100%. You can get out for pretty much no reason, whatever. It just says if the property is not acceptable to the buyer, then the buyer is able to cancel the contract and get their escrow money back. And so the same kind of goes for the financing contingency if it's contingent on financing. So the inspection period, I think, is different also for you guys. I know the inspections up there are dramatically more expensive too, aren't they? Like, $2,000 or something like that, where down here you may pay, around $500 for an inspection. Am I right on that? Or
No, our typical inspection out here is, between $500 and $600.
okay. I was thinking a friend of mine was from New Jersey, and they were telling me that they had and the report was like binding on the inspector or something like that. It was different. It seemed like almost like an engineer's report. So anyway, we don't have that down here.
I guess it depends on the level of inspection they're doing, but the typical home inspection, right, is still in that same range.
Okay. Yeah.
Yeah.
And are you able to get out of a contract up there if somebody cancels, or is that a different thing?
It depends on the market. In Manhattan, there are no inspections unless you're buying, a townhome or single family home.
Okay.
In New Jersey, you sign a contract and then you go into an inspection period where the seller is already bound. And then, Matt, how do you see it on Long Island?
Yeah, same thing here. So offer goes out, seller accepts the offer, inspection gets done. And as this is going on, someone can swoop in with another offer. So inspection gets done. If something major comes up, we'll negotiate. Otherwise, it's sort of as is. But until the seller executes the contract, it's the Wild West, man. Anything can happen.
So the seller doesn't execute it when they have the offer and during the inspection period. It's not
correct.
signed.
The contract's not even out yet. Lawyers up here will not even send a contract till after the inspection.
Wow. Okay, that is very different. So here you can basically, as the buy side, you can tie up the property, decide if you want it, and back out, which I hate as a listing agent, but it's something that buyers do often. So they can tie up the property just for writing an offer if the seller accepts the contract, and then they can pretty much get out for any reason whatsoever. So if they discover something that they didn't know about before, like for example, if they found out that there was an HOA fee that was too high per month, they could cancel. They could cancel for whatever reason.
Well, I think that was like the learning curve with Russ and myself, where you would send us properties and 2 days later they're gone. And we're like, what do you mean they're gone? How are they under contract already? We just didn't know or understand the process based on how we know it up here.
Yeah. Yep. So yeah, down here, the interesting thing too is that when a buyer and seller sign a contract, it's basically a binding agreement, but a buyer can back out, but a seller cannot. So a seller cannot cancel under any circumstances. Someone can come in with an offer $50,000 higher and they can't cancel. There's only one out for a seller, and that is during the end of the financing contingency period. So let's just say you have 30 days for financing contingency and you're closing in 45. At the end of the financing contingency period, if the buyer doesn't send a approval letter from the lender, like a full loan approval, then the seller has 3 days to cancel. Now, so like day 31, 32, 33, they could cancel. That's the only time a seller could cancel a contract. And so if you send that loan approval, they cannot back out no matter what from the beginning all the way to the end.
It's interesting, New Jersey is sort of somewhere in between there, because here the contract is signed and then you enter an inspection period where the buyer does have this opportunity. I think it's a little more restrictive than how you described it, but it is, they do have it locked up. Whereas on Long Island, like you said, it's the Wild West.
Yeah, and it's different for us when it comes to as-is contracts and the old, like I call it the regular contract, but the regular contract has repair clauses in it, which allows the seller could say, up to $1,500 in repairs from the inspection and for repairs required by the lender and whatever. And so they have three different types of repairs, and they can put a dollar amount in there. And if the seller is willing to do that dollar amount, then the buyer can't cancel. So actually the as-is contract protects the buyer better than the regular contract. The regular contract locks the buyer in, and which kind of sounds counterintuitive if you think of it. Like if you think of as is, you're thinking that's putting the buyer at more risk, but it's not actually. That buyer can back out for any reason whatsoever. They don't have to justify it. And in the other one, they have to have repair costs that are above the amount that the seller is willing to contribute. And then if the seller decides, hey, I know we only had $1,500 in there, but we'll pay the whole $5,000, then they still couldn't cancel. So they really can lock the buyer in with that contract, which it's not used as much because once we went through the downturn when we had all these REO properties, they required the as-is contract and everybody just got used to that. And that's pretty much all we see. Every now and then we'll get one on the regular contract, but it's rare.
Right. And the other big difference is down there are no lawyers involved in the deal, where up here, lawyers handle everything contract related.
Yep. Here we close with a title company, and oftentimes the title company is owned by an attorney. But there's no attorneys involved. So essentially it just goes back and forth between the agents. When it's under contract, they send it over to the title company and they'll pull title and start the work on the title end.
Awesome. So I'd like to touch on one more thing here. So a lot of people, I think, are hesitant to invest in real estate if this isn't their primary business. They don't understand it. It's much easier, to invest in the stock market, which is readily accessible. It's very, very liquid. What advice, and our thoughts would you give that person?
Yeah. So, obviously this is what I do. This is my business. So I'm very prejudiced towards my, the way that I invest. But what I found with buying single family property, so a couple of years ago, we only flipped property, and the tax repercussions of flipping property is terrible. So you lose essentially almost half of it would go back to the IRS at the end of the year. And when I started keeping these single family homes, what happened was we ended up, there's 5 different ways you make more money buying single family homes. You don't pay the short-term capital gains. You get the cash flow, the monthly cash flow. Then you get the appreciation as that property goes up in value. Then you get the depreciation against your active income. And then you get the mortgage buy down from the tenant that's in there paying off a mortgage for you. And so all of those things add up to a massive amount of money. Like, in our case, I think we've calculated, and this is obviously rough numbers. It's not exact, but essentially it's between $4,000 and $6,000 per property that we're getting in depreciation off of our active income. And so, now we have 50 properties, so it turns into a big number, where you actually can make quite a bit of money, over $200,000, without having to pay much taxes or any taxes. So
no, it's great. I mean, I really think there are, huge opportunities in, buying real estate, right? And, I think the 3 of us are all from the school of the MREI, right? The Millionaire Real Estate Investor that Gary Keller wrote. This is not a, Keller Williams plug by any stretch. It's just that it's just a great book, and it's very simplistic. And I think the biggest issue that people have with doing this type of investing is that it's not an instant gratification game, right? It's a long game. It's like you start doing this and you buy properties over the next 10 years so that, in 20 years from now, you can live extremely comfortably off of the income that these things are throwing off.
Yeah. Oh yeah. And the interesting thing to me about it is, one, I think barrier to entry, or reason why there's not more people doing it, is because of those 5 things that I mentioned. All of them are hard to calculate from the front end except for the cash flow. And so when you don't understand the power of the depreciation, nobody knows exactly how much the market's going to appreciate, right? So there's all these different things that it's kind of like fuzzy on the front end. And then once you did it, kind of a string of them together and it adds up, it's massive. It's like huge. And so, but that difficulty in calculating depreciation on the front end on a property is what keeps people from doing it. Because if I'm making, 12% by buying it with cash, and I'm depreciating and I'm saving $6,000 also, and then I'm also getting, cash flow. And so there's all these different things that are adding up together, and it makes it a great investment.
All right. Well, John, really appreciate you joining us and, giving us your insight on the market. Matt and I love working with you guys. You have a great team down there. So if anyone is interested, please let us know. Reach out to us at info@focusreg.com. Make a comment at focusreg on Instagram or Facebook. And we'll pass along all of John's information and you guys can hook up.
All right. Thanks, Russ. Appreciate you guys.